Good evening and welcome to the Wednesday edition of the Private Property Podcast. I'm your host, Zama Khumalo. And this evening it is an ABSA Wednesday, and as usual, you can certainly expect a lot of insights from the ABSA Home Loans team. We're also going to be speaking to somebody who is no stranger here to the Private Property Podcast. It is a relatively technical episode, but one of the really great things about what we've got lined up for you this evening is this is the kind of data that if you are a landlord and you're looking to, make sense of the economic impact of COVID and what it could potentially do to your portfolio, you definitely don't want to miss this one. If you're looking to, become a landlord and you want to understand how to look at various data and make the right decision, you also certainly do not want to miss this one. I think this is the one episode that helps you understand how collections is happening, where the state is, given that we're in a lockdown and we've seen various people being affected, from an economic perspective, and how they're doing even in terms of paying their rent and the effect that, those rental payments have had on various people's property portfolios. So you definitely do not want to miss this one. But of course, we are running a competition right here on the Private Property Podcast as usual. And one of the things that we definitely want to do, we have shared the competition details right here below. I'm going to share a little bit about the competition that we've got in store. But what I actually want to hear from you this evening is, if you're a landlord, are you making use of data, whether it is, data from TPN or data from, other service providers who give really great, data around rental collections when you, either set your price or when you make the decision on the next property to buy. I want to hear what kind of data do you usually look at to help you assess and to help you make the right decision for your property portfolio. Do share with us down here below. We definitely want to hear from you. Well, the thing that we're going to be exploring, of course, this evening is the insights from the latest TPN vacancy survey. And you've guessed it, we've got, of course, Miguel Dickens, who's the managing director of TPN Credit Bureau. I've also got, as it is ABSA Wednesday, I've also got Miguel Martins, who's no stranger to the private property, audience. And of course, he's the portfolio manager of investments at ABSA Home Loans. Miguel, thank you so much for joining us this evening.
Thanks, Zama. Good to be here.
Hello, Zama. Thanks for having us.
Michelle, I think I'm actually just going to start with you, right? Because we're going to be looking at the TPN, vacancy survey. We're also going to be reflecting a little bit on the ABSA survey, and we'll bring in Miguel a little bit. Perhaps let's look at, some of the insights from the vacancy survey. I mean, I remember a few months ago when TPN also released some of the best performing towns, and I found that very interesting. I think the best performing town back then was Stellenbosch, and apparently I was like, goodness, I should have had a property in Stellenbosch, would have been performing so well. And it really is great to kind of see the data of how tenants are essentially behaving, during this lockdown. Perhaps share with us some insights around, how rental collection is going at the moment.
So, Zama, you're absolutely right. I mean, when we spoke last, we were talking about the good standing ratio, and we were talking about how the bottom was kind of falling out of tenants' collections. And we were in the middle of lockdown and tenants couldn't move, and then there was restrictions were lifted and tenants could slowly start to move. But ultimately it was caused because we had a very substantial deterioration in people's earnings. Many people ended up with a loss of income, either temporarily or permanently, or they ended up with a reduction in what they were earning. And ultimately that caused a deterioration in how tenants paid their rent for the quarter. So in quarter two, we deteriorated finally by 8% of tenants in good standing to 73.5%. So if you don't have many tenants, as tenants lose their income, they're not getting back into the market. What do? They're cancelling their leases, they're moving back with mom and dad or family or friends or whoever they're moving in with, or co-sharing or what have you. And so as a result of that, you have less tenants in the market. Not only do you now have, as our market strength index notes, not only do you have less demand in the market, but you also have increasing supply. Certainly in some areas, like your Durban areas, your Mhlanga areas, your coastal Cape Town areas, where Airbnb properties, there were even more restrictions on Airbnb type short-term letting. And so Airbnb landlords are converting their short-term lets into long-term lets. So you have an increase in supply of properties, a decrease in demand. With an increase in supply, decrease in demand, guess what? there's too much supply of rental stock on the market. And that's what we've ended up with, 41% or 41 rating, 50 would be equilibrium, 41 deterioration. That is an oversupplied market. What do you get with an oversupplied market? You get high vacancies. High vacancies mean you get a deterioration in escalation. So what do I mean by that? 11%, 11.39, nearly 11.5% of rental properties are vacant at the moment in Q3. And that has impacted the escalations that landlords are able to achieve. So in Q2, the escalations deteriorated to 1.6% overall nationally. And in certain segments of the market, there's already negative escalation. So in our above 25,000, even our above 12,000 Rand rentals, we're seeing negative escalations in Q2. Even worse, preliminary data for Q3, which I haven't released yet, so I'm sharing with you live. Preliminary data shows that we've got negative escalations in that above 12,000 Rand market and Zama in the 7,000 to 12,000 Rand market. So with high vacancies, lower escalations, really it's time to hold on to those quality tenants that still exist. We want to hold on to them because they do still exist.
And they really do, still exist, Michelle. One of the things that I want to bring in, because I'm sure some of the viewers at home are thinking, okay, I'm hearing all these numbers, but how exactly are they affecting, some people? Already, as you were sharing some of those, declines, a part of me was thinking, oh my goodness, I'm hoping that landlords are understanding what the repercussions of, some of these numbers essentially are. Perhaps share with our, viewers, especially those who are already landlords, what it means for them when we look at the current trend. And already, you've shared with us, thank you very much there, what Q3 is even potentially looking like. So you're hearing all these numbers, but what exactly does that mean to a landlord who currently, let's say, is managing, whether it's 2 or maybe 3 of his, properties, and he's thinking, well, I've been able to collect rent, so far. Maybe earlier on they had a bit of an issue with the tenant, and they were able to, make use of the rental pack that yourselves and SSLR, had on the market. But now everything is back on board and things are moving swiftly. So why exactly should these numbers be something that, landlords essentially sit up and listen to?
So, if I look at some of the adverts that I'm seeing being posted by some of the bigger landlords, you've got our smaller micro landlords are competing with institutional landlords with 10,000 properties on their portfolio. And so they are incentivizing their tenants through things like, the Joburg inner city, I'm seeing get 1.5 months rent free on signing on your new lease agreement. I'm seeing get your first 6 months uncapped Wi-Fi. What we want to do right now in these big portfolios is we just want to attract the small demand that exists by offering incentives. I see in the ABSA survey that people are looking at maintenance. This is a good time to be maintaining and upgrading our properties. This is so important because tenants will be attracted to properties that are well maintained. So it's about, as you said, Zama, it's about understanding the data and then applying it practically into your circumstances to know how is that going to affect me in terms of, I have a tenant now, but in 6 months' time, what does that look like if my lease is going to come up for renewal? And if it's coming up for renewal, how should I be negotiating with my tenant to encourage them to stay? Because keeping a quality tenant now is the main attraction. It means that you have less opportunity for vacancy. When you have a rollover of tenants, there's an expense in rolling a tenant over, not least of which may be a commission charge for finding a new tenant, at least advertising and credit check charges. So you want to, if you've got a good quality tenant, you want to hold on to that good quality tenant, and you want to think about what type of incentives, and they don't have to be expensive incentives, and they don't have to be a drop in rent necessarily. But what can I offer my tenant that will motivate for them to want to hang on in my property?
And I think one of the questions I probably asked to the landlords even the tenants who are watching us at home, is if you're a landlord, what kind of incentives have you already, started thinking about? Because as Michelle is saying, I've also seen some of the big landlords, offering all kinds of, discounts. Your first month is for free. It's deposit free. You're getting uncapped Wi-Fi. Sometimes you're getting, free vouchers to different service providers. And they essentially do have the pockets to be offering those kinds of incentives for the tenants that they want to get onto their books. So if you're a landlord, have there been any interesting incentives that you've thought of? Maybe you're including uncapped Wi-Fi because you've already costed it into your rental amount. So in the eyes of the tenant, it's free, but for you, you've certainly run your numbers effectively that cost is absorbed. And if you're a tenant, what kind of incentives has your landlord provided, especially during this period? Maybe this was something that wasn't even necessarily available before we went into lockdown, but you're now seeing that they are trying to find different ways to certainly retain you as a tenant. Now, Miguel, I want to bring you in. I mean, we've got the ABSA HIS Q2 survey, and I know we spoke to your colleague Umuzi the other day, but perhaps let's have a quick insight into some of the areas that should concern especially property investors, because I know that the survey looked at a wide range, or rather spoke to a wide range of consumers that included investors. So what were some of the sentiments from the investors in particular? Because they're the people right now who are probably wanting to find different data to help them navigate the storm, and even perhaps people who are going to become landlords themselves.
No, thanks, Zama. So just linking on to Michelle's comments and your comments, it's time for landlords to up their game. And often we'll listen to the surveys and we'll hear this terrible news, but I think as investors tend to be very optimistic people. They look at the great deal that's in front of them. They look at the numbers that they put down on the calculations, and they tend to be to the upside, and they do the deal, and they'll figure it out. But I think we're hearing a lot of news at the moment, whether it's from economic news, whether it's from the TPN report, or even the ABSA Homeowner Sentiment Index, that says that there's something going on in the market and it's not good, and we're seeing the effects. And as usual, I think it's human nature. We don't think it will affect us. So the Homeowner Sentiment Index that Muzi, my colleague, shared with you last week, I've gone a bit deep and I've looked at the investor portion of that sentiment index and what it's saying. So what's interesting is that, firstly, the sentiment index, what it measures is how consumers feel about different aspects of the market. So is this a good time to invest? Is this a good time to buy? Is this a good time to renovate? Is this a good time to sell? And it gives us some really good insights into how consumers are feeling about it. And it's important also to note that this was taken around at the end of June, early July. So I'd call it our level 3, level 4, maybe level 3 type index, right? Because that's where people were and that's how they were feeling about it. But what I found really interesting is that we had two differing views when it came to property investment. So if you asked general consumers, non-investors, how they felt about whether this was a good time to be investing in the market, that index increased. It went from 67 to 71%, saying that this was a good time to invest or to get into property for investment purposes. But then in that group, we pull out those that are investors themselves, and you pull out their response. And that group dropped from 71 down to 61. So these two groups went in opposite directions, with investors saying, actually, so 61, still positive about the market, but not as positive as I was. There's something going on. And it talks to the fact that landlords who are in it, investors who are feeling the lockdown at the time, the ability to collect rents, that's what we've heard from Michelle in the TPN reports, and the outlook, they were definitely more circumspect and they were concerned about what the future held. But those non-investors only see the positives of property investment. And there are many positives, but they're necessarily seeing or feeling the actual challenges and risks that those investors are feeling.
And I think, Miguel, one of the things is when you're not in it, when you don't have your skin in the game, your property investment does seem like a really amazing, relatively rosy, painless thing or path to walk. But the moment you're kind of in it, and a lot of us, I think, when we started our property investment journey, we probably also didn't know as much. You're kind of learning certain things along the way. And a lot of the property investors that I've spoken to, some of them have said, if they had known what they know now, they don't know if they would have necessarily gone in, because you now know so much, how so many things can go wrong. Whether it's dealing with bad tenants or dealing with paying too much for a property, and all those kind of teething issues that you sometimes tend to have in the early stages of your property investment journey. We're going to go for a quick break, and when we come back, actually, we're going to take questions and comments from viewers at home around this one. I definitely want to hear from landlords around what kind of interventions are you putting in place to firstly just retain your good tenants, because as Michelle was saying, it really is that time where you don't want to lose your good tenants. And what are you also trying to do to attract some of those good tenants, because they are there. As much as many people will talk about bad tenants, they really are good tenants, and there are quite a lot of them, so we mustn't also make it seem as though they're a scarce resource. And if you're a landlord, I definitely also rather a tenant, I want to hear from you. What has your landlord done to either try and retain you, or what were some of the really good deals that you've seen out there that have tried to get really good tenants? We're also going to be, looking at, I think, some of the, and I want to take advantage of having Michelle here, some of the good performing areas versus the maybe not so best performing areas. As I said, I wish a part of me had maybe a property between Stellenbosch, because when I heard that TPN data, I was like, okay, wow, well, that's definitely kind of a good place to be buying in, because tenants there seem to still have been, paying their rent on time. They're in good standing, even when we're very deep into, into lockdown. So we're gonna go for a quick break, and when we come back, you'll definitely be hearing more from us. You're also going to hear about how you can enter the new competition that we have in store for you. We're going to be back just after this. Okay. Welcome back to episode 104 of the Private Property Podcast. I'm your host, Zama Khumalo. This evening, we're talking data, and understanding the latest TPN vacancy survey. If you're a landlord, you definitely want to make sure that you understand what the survey has in store, and also be able to, make the best decision for your property portfolio. We're also, of course, reflecting on the ABSA index. We spoke about it last week, but this week we're also looking specifically at the sentiment from investors and what this means for you as a landlord. Because I know that right now, more than ever, so many of us are inundated with so much data. If it's not the daily stats of, the coronavirus infections, certainly at a local level, it's at a global level, there's so much information coming at us. So you also want to get a sense of why is this important, and what can you essentially do with knowing this kind of data. And of course, I am joined by Miguel Martins, who is the portfolio manager of investments at ABSA Home Loans, as well as the TPN managing director, Michelle Dickens. She is no stranger. We always like talking data and numbers when we have Michelle. But before we get back to our conversation, we are, of course, running our competition. We want to definitely hear from you. We've shared the competition details down here below, and we're asking you to review our Facebook page on Facebook. So if you're watching us on YouTube or on Twitter, you can go into our Facebook page, make sure that you drop us a review and write your review, and we definitely want to hear from you. Take a screenshot and share it with us, and you stand a chance of walking away with an incredible prize. You know that we love giving away prizes here on the Private Property Podcast. We will be giving away 500 Rand cash voucher for people who review us and share that review with us on our social media platforms. And we will be announcing the winner of that competition on Monday the 14th, right here live on the Private Property Podcast. Now, Michelle, I think before the break, we were talking about some of these numbers, why these numbers are so important. And one of the things I definitely want to, ask you, because I want to take advantage of you being here, there are certain landlords who are thinking, okay, I can see where my portfolio is, I'm monitoring it, I understand it, but I'm now looking for new areas perhaps to go into. Perhaps just take us through some of the best performing and perhaps the worst performing towns. I know we won't go in depth into it, but I definitely liked that insight, because it also, I think some of the really good performing towns I found to be very surprising, because you would think that maybe it's all concentrated in metropolitan areas, but you find actually that isn't always necessarily the case.
Zama, it is so fascinating, because I did an exercise recently for our JPOMA members. Now, JPOMA is the Johannesburg Property and Managers Association in the Johannesburg inner city. And so again, we're talking about a metropolitan area full of different types of housing and different areas that make up the JPOMA area. And so you would think, oh, well, the JPOMA area, the Joburg inner city, how different can different little pockets of areas perform? The worst performing area in the JPOMA, Joburg inner city, in terms of rent collection, is Troyville, where 40% of tenants are in good standing. On the top end of the J40.
Only 40. Oh my word. I think you should say it the other way around, because when you say 40%, you should say it the other way around, that they are not collecting 60%.
No, it's too alarming. That's too alarming to say it like that, Zama.
That's actually how you should say it, because when you say 40%, someone will think, oh, it's only 40% who are not paying. So that means it's 6, but it's actually the other way around.
Other way around. 60% of non-performing tenants versus a city and suburban, which is over 80%. And so even though we're in such a small area, two little areas within that region perform vastly different. So let's talk about Sandton and Midrand. What do I have to say about Sandton? Well, guys, you're sitting with nearly 20% vacancies. So even if you are collecting rent, still 1 in 5 properties are vacant. And that's because we're talking about properties in the top end of the market. And as people start to downscale out of that top end of the market, what do you end up with? You end up with vacancies. So that's in our Sandton area. What about Midrand? Not far away. Midrand has actually performed incredibly well in terms of vacancy. In terms of good standing. So 86% of tenants in the Midrand area managed to maintain their good standing ratio. Well above Gauteng, because I said earlier that nationally we were sitting at 73%. Gauteng was sitting at 71%. So nearly 30% of tenants in Gauteng are non-performing, whereas in Midrand it's only 14%, because you've got an 86% good standing ratio. So that is my good news and my area for tonight.
And I'm sure, because sometimes I get asked this, I always shy away from this question quite a lot. And I'm sure, Miguel, you probably have people also ask, because I know that you're also an investor yourself. People tend to sometimes ask, which area should I invest in? Which area should I invest in? And the reality is that's not the first question that you typically have to ask. If anything, that question is, maybe it's question 6 or 7, but it's never the first question. And I think by the time you've done the question 1, 2, and 3, and you're now ready to look at, which area should I invest in, I definitely do urge you to interrogate some of this data, because then it will inform whether, it's in line with the strategy that you've chosen, because those are part of the, earlier questions you should be answering, certainly answering rather for yourself. I see here we've got Ubang Sabakwena, who says, I think to some extent word goes around in an area and tenants in one area stop paying. There's a bit of a a mob psychology going there. And perhaps that's the case, although I don't know if that necessarily is. Maybe there is a bit of that going around. Of course, we want tenants to be able to not fall for that, because there are repercussions for not paying your rent on time, especially if you're able to pay. I think it's one thing when you find yourself, financially unable to pay, then you have to obviously have a conversation with your landlord or the agent. But it's something completely different if you have the economic means to pay and you're deciding, well, my neighbors are not paying, so I'm also not going to pay, because there really are quite big financial sort of consequences to that one. So Miguel, I think one of the big things then, and I'd asked this even to Michelle earlier on in our conversation, when an investor looks at the ABSA survey and also looks at the TPN survey, what should they be getting out of this? Why should this be something that's important for them to bear in mind? We were saying earlier that one of the big things that came out from the investors, that right now their sentiment has kind of decreased relative to people who don't have their skin in the game just yet. And maybe it's because we've gotten burnt so often, and then you go through lockdown and we get burnt a bit more, and now you're thinking maybe don't go this route just yet. But certainly for investors who are already in it, or investors who are looking to go in it, what should they be getting from both these surveys when they look at them and try to make the right decision for their property portfolio?
No. And that's a golden question. So, Zama, the world has shifted. I think if you're an existing investor, what you're experiencing, how you're managing your properties 6 months ago, cannot be how you manage those properties and how you manage those tenants going forward. You need to adjust given the new risks. You need to adjust given the fact that tenants now have more choice potentially, but also that those tenants are also economically impacted. They might have suffered reduced incomes, lost jobs, etc. And you guys are making decisions and they're going to be long-term decisions as what do I do now to retain that tenant, given that they might recover themselves and they're a good person and they're a good tenant in the long run. And how do we solve this together, as opposed to forcing that tenant out and then bringing a new tenant in, not knowing the background to that person, and really introducing new risk into your property investment, into your portfolio. And if I was a new investor, I think be excited about property investment, but now more than ever, be excited and understanding more, learning more, in researching the area, getting to understand what a high vacancy means, what it really means. This property you're looking at might be beautiful and it might be a great product to rent out to a prospective tenant. But if there are 20% vacancies in Sandton, then there is going to be a huge amount of competition. The rentals you expect to achieve are going to be hugely under pressure. And you got to be really realistic and rather be more conservative and prudent in your numbers, and really seek out investors or in the same market as you, and get a good understanding of how they're managing, how they're experiencing the market, and really take some learnings from that. And in the absence of that, read. TPN survey is very insightful. ABSA and the banks, other financial institutions, there is so much information coming out there. Read and apply it in your investment propositions.
We've got a question here from one of our viewers. We're, of course, taking your questions and comments at home. Sanelisiwe Uze asking, when buying property for rental, is it ideal to get an agent to manage all things related to the tenant, or is it best to be personally involved? I'll give it to Michelle. I'll also bring in Miguel, because I want him to wear his property investor hat, because I know he's got insights onto that one. I think all three of us have a take on this one, because you can either be you're outsourcing everything, or as Sanelisiwe is asking, or do you maybe rather do it yourself, Michelle?
So what I can share are the numbers. 30% of landlords choose to use the services of an estate agent, and that's both to find the tenant as well as to manage the tenant. And 70% of landlords choose to DIY it and do it themselves. And the majority of small landlords, micro landlords, have less than 5 properties in their portfolio. And so that's manageable. Zama, you can manage, you can keep your day job, and you can manage 5 rental units and you can get on with it. But as your portfolio starts to grow, it becomes a full-time job to manage the needs of a tenant, because it is not a passive income. Tenant needs happen 24/7. The geyser burst, there's been a burglary, the rain has come and the roof is leaking. It's a 24/7 job. So it's a personal choice. Do I have the time to invest in my property, and do I have the skills? And am I a soft person? Because soft people, tenants will walk all over you. Or do I want to put an agent between me and the tenant and have a buffer? Because it's much easier when the tenant hasn't paid to phone the estate agent and to let rip on the estate agent, get me my rent. Whereas if you have a personal relationship with your tenant who's 9 months pregnant, it's very difficult to have that kind of conversation sometimes. So it's a very much a personal choice.
Miguel?
Very much a personal choice. So, so a lettings agent is a specialist, a professional. They understand the industry, and I think when you get someone that, when you look to someone like that to manage your portfolio, you're going to create a huge amount of dependency that person has got the right skills, the manner, the professionalism to manage your portfolio, keep it occupied, manage the tenants, and ultimately look after your investments. They are your asset manager. If I was in investments, not the usual investments, they would be my asset manager. But what I would say is never lose sight of keeping close oversight on your property investment. Never lose sight as to who's living there, what are the nigglies and the maintenance issues with that property investment. Ultimately, it's your accountability. And what I often see is investors who do choose to go with lettings agents give that accountability away, and then very easily blame those lettings agents when their investment's not yielding the returns that they expected to yield. They see it as an arm's length investment. And I think that's why 70% of landlords choose to manage themselves. After a little bit of practice, they realize that it is possible. But there's definitely a place for both models. But whichever way you go, remember, it's your investment. You're sitting with this property, with the good and the bad, and you really need to take interest in it.
And I think, probably to add, I think one of the things I appreciate is it really does echo what you're saying, Miguel. I think one of the really big things that a prospective landlord needs to look at is you also want to understand what goes into, managing your portfolio. And it is easier to do it when you've got 1 or 2 rental properties, when you understand the lease agreement itself, because you tend to find that a lot of landlords haven't read the lease agreement extensively themselves. And that's something that they typically tend to expect that the tenant must, understand, and they'll only go back to it once something goes wrong. So when you kind of manage your own properties, you almost go through each and every line so that you as the landlord also understand it. And even if you're to outsource that component to your letting agent, be clear about what is in the lease agreement that's essentially been signed, and familiarize yourself with those kinds of things, because you don't want to have to go back to it only when something wrong has essentially happened. You wanted to add something there, Miguel?
Absolutely. As a first-time investor, I would definitely support that you manage your own properties up until you got 2 or 3. Because that way you get to really understand what's involved in sourcing a tenant, placing a tenant, managing the property, etc. So that when you choose to bring on a lettings agent, a property manager, and you have a very good idea of what you should expect from them, and what's reasonable to expect and what's unreasonable to expect. So that would be my advice to first-time investors, is really look at it. And there are so many tools out there to help you do that. Just with Michelle and TPN, whether it's the lease, whether it's the credit checks. And with TPN, I do credit checks on my cell phone. You SMS a ID number away, and you get and you get a credit check back in a couple of minutes. So there's so many tools out there to enable you to manage your own properties, and it's a learning that you shouldn't avoid and shouldn't miss out on.
And before we wrap up our conversation this evening, Michelle, any final tips to landlords and tenants, especially during this period where, I mean, you have a really good overview of what the vacancy are across the country, what the tenant behavior is across the country. Any tips you'd like to share to both parties, especially for the remainder of the year? I think so many people are just like, let's just get to the end of the year. Maybe 2021 might be slightly different. Hopefully, we really do hope that 2021 doesn't try to outdo itself. But what kind of tips would you like to give to specifically landlords and tenants when it comes to their rental and certainly understanding vacancy from the landlord's perspective?
So if I was to talk to investors, my tips for investors are that we have not hit rock bottom yet. And it is going to be a very long and very slow turnaround. And as a result of that, I know so many people are saying, you know what, now's the time to buy. Now's the time to buy because there's distressed properties on the market. And there are going to be distressed properties on the market. And there are probably going to be more distressed properties coming onto the market in the near future. Take your time. Don't rush out. In the boom years, if you rushed out and bought the first available property and you managed to tenant it, it was okay because we were running a 20-30% capital growth year on year. Property expenses were not nearly as expensive as they are now. Your errors were forgiven. You could still make a return on your property. Right now, it is tight. Money is tight. Take your time in finding investment opportunities. There's going to be loads of opportunities. You don't need to rush into anything at the moment, and it's going to be a long and slow recovery. If I'm talking to the tenants that are listening in at the moment, it's a tenant market, guys. Yay, whoop whoop. You're going to be spoiled for choices. Hopefully, there's going to be some reduction in rentals. But if you are in a fixed term lease agreement, you can't just cancel your lease and move on to something cheaper without taking into consideration any penalties that the landlords may charge for early cancellation. Not only are there early cancellation penalties, and even if you are in a month-to-month lease, moving property at the moment has moving costs. It has the requirement to have a deposit down on the new property whilst you have a deposit on the old property. Negotiation and communication is your tool at the moment. So how do you negotiate with your existing landlord to try and encourage some of those incentives that might be on offer, rather than simply cancelling and moving on to the next property?
Thank you there, Michelle. Miguel?
Zama, I think the successful investor is an investor that's still here in 2 or 3 years' time. And very similar to Michelle's comments, just watch your rentals, make sure that you look after your tenant and that tenant stays with you. Do not focus too much on making that profit at this stage. Just make sure that as a landlord, as an investor, that you survive and you're still here in 2, 3 years' time. Watch your costs. So do the maintenance. Don't wait until you need to repair. It's going to be a lot more expensive. And I think interest rates. I think we in a great interest rate phase at the moment. But I think if you're purchasing now at 7% prime, and are you sure that your investment property can still handle if we go back to where we were a few short months ago at 10%? So really stress your costs, stress your rates. Mind your rentals, and just make sure that you are here still around 2 to 3 years from now. And if you have the opportunity to pick up a great investment property during that time, 1, 2, or 3, that's fantastic. But ensure that it really does tick all the boxes. As Michelle said, There's not too much forgiveness in the market. If things do turn against you, it might not be just that month or that property. It might be your portfolio and possibly your credit score and your financial structure. So really take care, but remain optimistic.
Miguel, Michelle, thank you so much for joining us this evening. I think the one thing I'll share again, and it's something that Miguel said earlier on, is that it's the time for landlords to up their game. I think if anything, this is now that time for landlords to do that. If you had kind of been, taking the back seat and doing the very bare minimum, and sometimes perhaps not even providing the best service for your tenants, now is the time to up your game, because tenants are spoiled for choice, as they should be. And I think as a landlord, you really do want to give the best service to your tenants. You tend to find that they also take care of your place better if they are getting that kind of service. Miguel, Michelle, thank you so much for joining us this evening.
Thanks, Zama.
Thank you, Zama.
And that's
all
it
the
from. Thank you so much. And that's, of course, it from us here on the Private Property Podcast team. It has been a pleasure to be with you this evening. I think one of the really big things is, now more than ever, if you're a landlord and perhaps you weren't quite clear about some of the things that you should be doing, understanding, your portfolio, because I think we also underestimate what understanding your portfolio entails. Sometimes just buy a property, you know that you can pay everything, or you've got 2 or 3 properties and you're able to meet the costs. But now more than ever, to almost go back to the drawing board and understand the numbers, but also understand the trends. So you can, of course, look at the TPN vacancy survey, but also the ABSA survey to better acquaint yourself with some of the trends and where essentially is going, because that's going to help you make the best decision for your property portfolio going forward. Well, that's it from me, Zama Khumalo. We're back again tomorrow evening at 7 p.m. You definitely do not want to miss it. Of course, continuing with the conversation on our social media platforms, we do want to hear from you if you're a tenant or a landlord about some of the incentives that you've seen, landlords offer if you're a tenant, or if you're a landlord, what kind of incentives have you already started offering your tenants? We're going to be back again tomorrow evening, and as usual, hoping that you're staying home and staying safe. Welcome to the first edition of the Private Property Podcast. As usual, we'll be bringing you experts to help us navigate this COVID-19 crisis, whether you're a landlord or a tenant, or somebody perhaps even looking to get into the property market and don't understand how this crisis is actually going to affect your property journey.
Yes, we certainly do find ourselves in very, very interesting and very unique times.
So what I've found in my experience that in terms of buying repossessed property, I've had a lot of my wins because of easy sales.
So you want to have good credit on your credit profile. You definitely don't want to have no credit profile on your credit profile. This is what we determine as a thin credit file.
Accrued value during the course of the marriage will have to share with the other spouse, depending on what their contract says, the assets they gain during the course of the marriage. So that's basically what it means.
We are profiling young people in property. You all know how excited I am to talk about property, but I even get more excited when I talk to my peers.
Millennials and young professionals are money conscious. We understand that money doesn't grow on trees, and so we're trying to find ways to accommodate ourselves.
Who are the parties in the buying and selling process, right? So you have the buyer, you have the seller, you have the bank, and you have an estate agent.
Good evening and welcome to episode 66 of the Private Property Podcast.
Probably top of the list when you're sourcing a new tenant is that word of a credit check. Very, very, very important. That's your starting point.
You want to create a savings buffer for you to be able to look at investments that are longer term.
You know, those contracts, those offer to purchase have been drafted by legion of lawyers, and I can make fun of lawyers because my wife is a lawyer, okay? So.
Welcome to episode 80 of the Private Property Podcast.
Out of everything we've discussed tonight, I think your managing agent is critical because they're the custodian of the relationship. They're the ones that are managing the affair.
We are there to analyze a market and to look at the behavior of buyers and sellers in the market.
Be able to market yourself because in essence, real estate and as an agent, it is you that we first buy before we buy the company that you're with.
Hi, I'm Brian Kappa. I'm a 10-time South African motorcycling champion. My family and I have chosen to live in Fourways. There's some really great suburbs in our neighborhood. There's a lot of families living in the surrounding areas in places like Lone Hill and Cedar Lakes. What draws people to Cedar Lakes is that it's so close to the Broadacre Shopping Centre, Cedar Square and Fourways Life Hospital. Lone Hill is a major draw card for many families. It's got some great smaller commercial centres and some fantastic schools like Crawford College. From an entertainment point of view, Monte Casino really comes alive at night. There's so much on the go and there's an incredible energy in the area. Our family just loves the fast-paced lifestyle that Fourways brings. But honestly, the thing that attracted us most to this area was the active lifestyle that it offers. As a family, we've chosen to live in Fourways because of the lifestyle and convenience, and this is our neighborhood.